Hello, I'd like to welcome everyone to the final portion of our three-part risk advisory webinar series on evolving risks. If you missed any of our previous webinars this fall, feel free to access the session recordings via our website, along with many other risk-related resources. Today, we will be focusing on enhancing fraud mitigation through internal audits. My name is Allison Conklin, and I'm an audit manager here at GRF CPAs and Advisors, and I will be today's session moderator. I'd like to start off today with some quick housekeeping items and explain what you will need to do to earn CPE credit. Participants seeking CPE credit today must complete and submit a short evaluation survey that will appear automatically following the webinar. You will be asked to recall these words in order to receive credit. Please write down the CPE words when they are provided and hold on to them until you receive your certificate. They will not be provided again. The slide deck and recording from today's discussion will be available on the event page on our website. It is now time to introduce our speakers for today's webinar. First, we have Walt Darengowski, who is an audit partner with over 20 years of experience in the public accounting industry. Walt is a certified expert in fraud identification, prevention, and detection. Next, we have Mac Lillard, who is a senior manager on the risk advisory team here at GRF with almost 10 years of experience working with nonprofits and INGOs. Mac is an expert in enterprise risk management, fraud examinations, information systems, and cybersecurity. Finally, we have Kristen Ocampo, who is a senior internal auditor on the risk advisory team. Kristen is an expert on identifying internal vulnerabilities and developing practical solutions to address internal control deficiencies and risks. I'll now turn it over to the speakers for our presentation.
Thank you very much, Allison, and thank you everyone for attending today's webinar. We are all pleased that you could all join us today. The agenda for today, we are going to start and go through the background and the current landscape of the fraud in today's environment. With COVID and the study that was done by the Association of Certified Fraud Examiners and the survey that they compiled, fraud and other improprieties are significantly higher, especially as it relates to the IT environment. Then we are going to go into detecting and preventing cyber fraud and what organizations can do internally using technology to prevent and detect fraud. We will conclude with next steps, closing remarks, and hopefully have some time to answer any questions. So let's get started.
We've come to our first polling question. Polling question number 1. Does your organization have a formalized anti-fraud program? Answer A for yes, B, no, C, practices in place but not formalized, and D, unsure. Please take a moment now to answer. While participants are submitting their answers, I'll provide the first CPE word. The first CPE word is fraud. If you would like to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the first CPE word is fraud.
All right, we'll take a couple minutes to see. And it looks like the majority of you do have a formalized anti-fraud program, roughly about 59% of you, which is great. The Association of Certified Fraud Examiners in 2022 put out their recent study and have found that smaller organizations with less capacity for robust internal control processes result in higher median losses, and there is more opportunity to commit fraud. Additionally, with the changes in internal control mechanisms being updated to incorporate new technologies, for an example, payment platforms, there has been a further increase in the opportunity for fraudsters to take advantage of outdated or improperly designed internal controls. This is one of the reasons why frauds are becoming more difficult to detect. With technology moving so quickly, really provides fraudsters with ammunition to be successful in their schemes. Asset misappropriation through fraudulent disbursement scheme accounts for the highest percentage of frauds. Kristen will be covering some of these schemes later in the presentation. Fraud is a global problem and it affects every region and every industry. The study performed by the Association of Certified Fraud Examiners found that out of approximately 2,100 cases from 133 countries, frauds resulted in a total loss of more than 3.6 billion. And the average loss per case totaled approximately 1.7 million, of which 21% of those cases had losses of 1 million. And certified fraud examiners estimate that organizations are going to lose 5% of revenue due to fraud each year. Further information provided based on the study performed by the Association of Certified Fraud Examiners found that organizations are allocating more resources to prevent and detect fraud, which is really good. It's good that organizations know that fraud is becoming a lot more pervasive and a lot more known in the community. So it's good that they are investing into fraud prevention and detection controls. The number one anti-fraud control that organizations are implementing the last decade are the establishment of hotlines. And this is to deter and detect fraud. This increased 16%. Tips and whistleblowers are still the best way to detect fraud. The second anti-fraud control that significantly increased from 10 years ago is fraud training for employees. This would significantly be helpful in deterring fraud to get training, especially as it relates to IT. Fraudsters have been using ransomware and phishing attacks on organizations as the preferred data theft method by cyber thieves. A surge of phishing, ransomware, and supply chain attacks are up 38%. Additional numbers that came up from the study performed by the association is that 51% uncovered more fraud since the onset of the pandemic. And 71% expect fraud to increase over the next year. And then 38%, based on the study done, as organizations are increasing investment in anti-fraud technology. Now we will go through some ways your organization can protect themselves. Having anti-fraud controls have been proven to lower fraud losses and significantly increase quicker fraud detection. Having good banking internal controls and heightened review and approval processes in place will help deter fraud and other improprieties, which are all ways to protect your organization. Positive pay and ACH blocks shouldn't be new concepts. At a high level, they provide a mechanism for referencing check and ACH logs submitted through the bank for approval against the internally developed check and ACH logs to identify potential fraudulent payments that originated from other sources. One reason to enact an ACH block on a business account is if you suspect your account has been compromised. An ACH debit block can prevent fraudsters from being able to debit money electronically from an account. And setting up an ACH block is easier than setting up direct deposit. Just call your bank, provide your credentials, and request that they set up debit block immediately. And if you're doing this in response to a fraudulent account activity, mention that on the call to determine what additional steps you should take. Positive pay is an ACH filter that allows you to create a list of payees or vendors that will be automatically approved when they initiate an ACH debit from your company's account. Certain criteria for these funds transfers can also be established. For an example, you might put a cap on how much they can debit in a single transaction. These two banking internal controls help to prevent unauthorized payments, saving the organization money, and provide a mechanism for following up on attempted fraud. Also, if you have dual signing authority on outgoing payments, Ensure your bank is aware of the policy and ensure they are strictly enforced. I've seen instances at clients that fall victim to fraud who have checks or wires signed off by one individual that should have been approved by two. Annual training over the anti-fraud program helps to protect the organization from fraudulent activity and reinforces the organization's no tolerance policy. One training program that is popular and one that I'm familiar with is Know Before. Another practice your organization could look into is having cyber insurance. This transfers right of a cyber breach, but I caution you, it can be costly. But if you do provide proof of employee training, this can help reduce the cost of insurance. Here are some more statistics to the right of the slide, and again was completed by the study performed by the ACFE, are related to detection and illustrate the importance of having a clearly defined mechanism for submitting whistleblower complaints. It's really not enough to have a policy in the employee handbook that never gets revisited or doesn't really map out processes or how to file a complaint. Whistleblowers are the key ingredient to ensure there is an anonymous channel to report fraud, which will increase the number of complaints and ensures you have appropriate process for receiving, cataloging, and following up on complaints. As illustrated on the slide, 42% of frauds were detected by tips and organizations with hotlines and had less dollar loss, and the fraud was detected quicker. Conflict of interest forms should be reviewed and signed by both board of directors and employees. And at a minimum, anyone with decision-making power or purchasing power should be signing these attestations. And they should be revisited every couple of years as conflicts do change over time. And then also business continuity and disaster recovery plans, they focus on what to do in the worst case scenario and really outlines the steps to be taken to restore systems and processes to minimize downtime. Business continuity is more comprehensive, while disaster recovery planning focuses on the IT side of operations. There should be a formal process that outlines 1, fraud response, 2, appropriate parties to contact, and 3, next steps. And with that, I will turn it over to Mac to proceed on going through strategy, risk management, and internal audit.
All right, thank you very much, Walt. And I did just want to spend a little bit of time going into some additional detail over whistleblower assessments, as Walt indicated on some of those past slides, looking at some of those statistics from the ACFE report to the nations. The majority of fraud is uncovered or identified through some sort of tip. And we'll also see that within this graphic here. As you can see, 42% of occupational fraud, how it was originally detected, was through this tip. And if we look at the graphic to the right of that, we'll see furthermore that the individuals actually reporting these or issuing these tips are from an employee. So they're coming from somebody internal to the organization. So I just wanted to highlight that because, again, that really just emphasizes the importance of having this whistleblower process in place. So one thing we see, very commonly in practice is that organizations have a formalized policy. They have a procedure or a chain of command in which you report any sort of known or suspected fraudulent activity. But the one issue with that is that, some employees may just naturally feel uncomfortable reporting that type of information. So that really just emphasizes, again, the importance of having some sort of anonymous channel. And this is particularly important at small organizations where teams work very closely with one another. They don't want to risk the chance of something coming back to them and, potentially suffering any sort of backlash from colleague or from the employee that they submit the complaint over. So having that anonymous hotline really just helps to increase the overall number of complaints you get. And, we have seen other studies in which we'll see people will actually note that they would not have reported something had they even become aware of it, solely because of that fear of suffering any sort of backlash because they didn't have an anonymous channel. So building on top of that, what do you do once you put this anonymous channel in place and you start receiving reports or allegations? It really is important to have a formalized process from end to end, not just implementing the methodology to report these and having that anonymous hotline in place, but also having a process in place as to how the organization fields those allegations, what they do in terms of following up on those, to substantiate them, to catalog them, and ultimately move forward with any sort of legal action as necessary. So it might actually be necessary for your organization, again, depending on your context and the risk of fraud, the number of whistleblower complaints you could expect. It might be necessary to actually have a CFE or some sort of other subject matter expert available to field these allegations as they arise. And this is particularly important when an organization is implementing a new whistleblower process, or if you're just now implementing an anonymous hotline, because it's very likely that there are certain employees who may have been sitting on information or complaints that have withheld reporting them as a result of not having this anonymous channel. So we've seen this a lot in practice where somebody implements a hotline or some sort of web-based platform, and all of a sudden they get 10, 15, 20 whistleblower allegations that have just been compiling over the past couple of years. And then they're left having to scramble in order to follow up and properly substantiate or unsubstantiate these claims. So first and foremost, I think Walt had also alluded to this, but it's really important to have that training over the entire anti-fraud program, but specifically over the whistleblower process. Again, especially if you're implementing a new process or a new channel for people to anonymously report that, ensure that they're getting trained on that during the onboarding process for any new employees, as well as annually on a refresher basis, just to go through the process itself, any significant changes or information that your employees or stakeholders need to be aware of. Consider using a forensic auditor or other subject matter experts to follow up on allegations as necessary. There is benefit to following up on certain allegations internally, depending again on your skills, knowledge, expertise, the sensitivity of the situation. But in all instances, it is kind of a best practice to use an independent third party, again, just to make sure there's no conflicts of interest, everything is being performed independently and objectively. And again, you're leveraging a subject matter expertise who specializes in performing such assessments, following up on these types of allegations. And as the third bullet point here notes, substantiating or unsubstantiating these claims as it is necessary to appropriately follow up on any whistleblower complaint, compile the necessary documentation, perform follow-up interviews as necessary and as available. Again, if somebody reports something anonymously, you may not have the opportunity to follow up and ask for additional information, but doing whatever the organization can, again, to compile evidence to either support or refute the claim, and then building on top of that, in the instance that you have substantiated these claims and identified that the fraud or the tip is valid and that there has been any kind of unethical or fraudulent or any other type of behavior that just requires any kind of follow-up, that should also be specifically defined within your whistleblower process and anti-fraud program as to, in terms of a dollar amount or a threshold as to which you'll pursue legal or criminal action against the individual, at what dollar threshold or what level of fraud or unethical behavior will you simply terminate the employee, document the reasons for such termination and not pursue legal action, and then at what level the organization may just require disciplinary action, not termination, additional training or what have you, just over normal interactions with employees, as well as the anti-fraud program. So again, clearly defining that within your policy so that when something does come across the table that gets substantiated, you're not sitting there trying to figure out how to respond to this. You have that clearly defined as to what the organization needs to do. And you have, a short list of attorneys or other subject matter experts that you can reach out to assist in, again, following up on and moving forward with any of these claims. But with that, I think that'll take us to our second polling question.
All right, second polling question. Do employees at your organization use corporate credit cards? Answer A for yes, B, no, and C, unsure. Please take a moment now to answer. While participants are submitting their answers, I'll provide the second CPE word. The second CPE word is document. If you would like to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the second CPE word is document.
Thanks, Allison. It looks like we have the responses here, and about 80% of participants answered yes, that their organization does use corporate credit cards. About 14% answered no, and 6% answered as unsure. And this polling question is, well, first, thanks to everyone for participating in the poll. And this polling question is a good introduction to the next section of our webinar, which is going to cover fraud risks associated with the expense reimbursement process. Credit cards are often one of the highest risk areas within this process. So it's interesting to see that 80% of attendees do use credit cards at their organization. So I think this next section will be particularly relevant. Let's get started and move to the next slide. Before we talk about specific fraud risks, I want to first discuss what types of processes typically fall into this overall category of expense reimbursements. So these processes are not fraud schemes, but rather the processes that could be susceptible to fraud. The first process are corporate credit cards. So this is where an employee can use an organization's credit card to pay for a business expense, and then the organization pays the balance of that credit card. The second process is expense reports. And this would be a circumstance where an employee pays for an expense on behalf of the organization upfront and is reimbursed later after submitting an expense report and appropriate documentation. The third process is travel advances, and this would be a situation where the organization provides the employee with money upfront prior to a business trip, and then at the conclusion of the trip, the employee submits a travel report that documents how much of that advance was used during their trip and refunds the organization any leftover money. So now that we've laid that groundwork, let's move to the next slide and discuss expense reimbursement schemes. We've already talked a little bit about the Association of Certified Fraud Examiners report to the nations, but I wanted to highlight a few specific places where the report talks about expense reimbursement schemes. The image on this slide was extracted from the report's fraud tree, which is basically a diagram that classifies different types of fraud into different categories. And on a broad scale, expense reimbursement schemes are first classified under asset misappropriation, and then under cash. From there, expense reimbursement schemes fall under fraudulent disbursements. Moving to the next slide, we can talk about specific characteristics of expense reimbursement schemes that are outlined in the Association of Certified Fraud Examiners report to the nations. The first characteristic is that the average loss from an expense reimbursement scheme is $152,000. So that number by itself may mean different things to each organization depending on your size and revenue and budget. But remember, fraud could impact grant or compliance requirements and the overall culture of your organization, regardless of the dollar amount. The second characteristic is that expense reimbursement schemes were generally ongoing for 18 months before being noticed. And the chart on this slide, which is also from the reports of the nations, shows that expense reimbursement schemes are tied with a few other types of fraud schemes as the longest running type of fraud that was noted in the report. And the third characteristic that I wanted to mention is that 18% of expense reimbursement schemes were perpetrated by executives in upper management. And we'll touch on this topic again on the next slide. So now we're ready to talk about fraud risks. Starting with increased travel. Many organizations paused or limited business travel over the last few years and are now resuming more regular business travel. So since employees haven't used the process in a while, the expense reimbursement process, they may not be up to date on what the proper procedures are. And even more importantly, the employees in charge of approving expense reports or credit card transactions or travel advances may not be up to date on the process either. So this presents an increased opportunity for fraud to occur. Similarly, outdated policies and procedures can mean that your organization is more vulnerable to fraud because, again, employees may not know how to properly report or approve expenses. Sometimes there's a question of, how do you know when your policies and procedures are outdated? In general, policies and procedures should be reviewed annually or after any major change to the process. A major change that we often see organizations undergo is moving to a new expense reimbursement application, for example, Expensify or Concur. That's the type of change that would trigger the need to update your policies and procedures. The next fraud risk is executive director or CEO expenses. Typically, this position is a trusted individual within their organization, and so they may not face the same scrutiny as other employees. Travel advances also present fraud risks because funds are provided to an employee upfront. One specific thing to look for if you're auditing travel advances is for any employees who may not have closed out their travel advances in a timely manner, or employees who received a second travel advance prior to closing out their initial travel advance. And the last risk we have noted on this slide here are credit cards. We mentioned already during our poll that credit cards present fraud risks, and we have a few slides on more specific risks that we'll get to now. One risk specific to credit cards is a lack of policies outlining which expenses can be paid with a credit card. So in general, a best practice is for an organization to limit the types of expenses that can be paid with a corporate card. Regular vendor invoices, for example, should not be paid with a credit card and rather should go through the organization's regular accounts payable process. The accounts payable process typically has its own system of internal controls for vendor payments that may not be adhered to if a credit card is used. And in general, the more expenses that are run through corporate cards, the higher the opportunity for fraud. Another risk area is that credit card expenses may receive a less stringent review than expense reports. So if you're auditing credit cards and you're evaluating your organization's credit card controls, make a note as to whether credit card users are required to submit the same level of documentation, such as receipts, that an expense report or a travel advance would require. Another risk is that there may not be proper separation of duties between the reviewer of credit card transactions and the individual paying the credit card bill. Another risk could be that a credit card holder has the ability to pay the credit card bill, and that would be a huge fraud risk as well. Let's move to the next slide. Perfect. And we'll talk about some additional fraud risks here. Another risk is that there's no verification of the total monthly credit card bill prior to the bill being paid. So the credit card statement should be reviewed prior to payment to ensure that each expense received review and approval. If that's not happening, it opens the door for fraudulent charges to slip in among the approved charges. Another risk is interest or late fees on credit card payments. So when you're getting ready to start your audit of an expense reimbursement process, one thing to look at is the general ledger to see whether there are interest expense or late fees associated with credit cards. Those could mean a few things. It could mean that the process for reviewing and approving expenses is not designed correctly, so it's causing delays in finalizing the credit card payment. Could also indicate that the review of credit card transactions is rushed, which would increase your fraud risk. And our last risk here is the lack of policies governing issuance and termination of credit cards. Not everyone in your organization needs to have a corporate credit card. Of course, only employees should have corporate credit cards. Independent contractors should not. Family members of employees should not. In addition, when an employee who holds a corporate card is terminated, their credit card needs to be terminated as well. So now that we've reviewed these fraud risks, let's talk about what internal audit's role in this process is. So the first step for internal audit is to understand your organization's fraud risks as it relates to expense reimbursements. And that's an assessment that you'll need to do for your individual organization. The risks we mentioned, they may not all apply to your organization. So taking a look at a list of risks and seeing how that applies to your specific situation is the first step. And secondly is to actually audit the expense reimbursement process. As you can see on this slide, our recommendation is typically to audit this process annually. And if you remember a few slides ago from the report to the nation's characteristics of expense reimbursement schemes, expense reimbursement schemes are typically ongoing for 18 months. So if this area is not audited annually, fraud may not be caught in a timely manner. Another thing to note is, and sorry, if we could just go back to the previous slide. Another thing to note for an annual expense reimbursement audit is if you review the risks at your organization related to expense reimbursements, and you conclude that it's actually lower for your organization, for example, maybe your organization doesn't use credit cards or travel advances, then what you might want to do is just audit whatever your highest risk area is annually. So that could be executive director or CEO expenses, and then save the audits of the full expense reimbursement process for maybe every other year. The third step for internal audit is to think about how you could use data analytics to identify trends. And Mac will actually talk a little bit more about data analytics in the next section of the webinar. But I just wanted to point out, I know sometimes internal audit, we are trying to use more data analytics in our audits, and we sometimes can run into roadblocks because management doesn't have high data integrity. But employee expenses might be one area where your organization does have good data, especially if you use Expensify or Concur, where you could extract a report from one of those systems. Or if you do use credit cards, you may be able to export a list of transactions into Excel. So let's move to the next slide and talk about what audit procedures your internal audit team might use when auditing expense reimbursement processes. First, data analytics, we just touched on this. And then second is sampling. And the amount that you sample, of course, will be based on the risk level at your specific organization. What are some red flags to look at when you're conducting your audit? Multiple reimbursements, expenses that are duplicated either on multiple expense reports or on an expense report and a credit card statement. Another red flag are fictitious expenses. So these are expense reports or credit card statements that lack underlying support. We can move to the last slide in this section and talk about what types of recommendations internal audit could give to management to reduce their fraud risks around this process. So the first one is to have clear policies and procedures. Of course, as internal auditors, that's always our first recommendation. Clarify your policies and procedures, make sure they're updated. Going along with this, it might be useful for management to define routine expenses like a monthly phone or internet reimbursement in an employee handbook. And then ensuring that management has proper controls in place over credit cards and of course over the rest of the expense reimbursement process as well. So I think that takes us to the end of this section of the webinar. If there's anything that your organization has come across that we didn't touch on here, feel free to put it in the chat and we'll try to follow up at the end of the webinar. And it looks like we're ready for our next polling question.
Yes, thanks, Kristen. We've come to our final polling question. How often do your organization's risk management and internal audit functions meet? Answer A for weekly, B monthly, C annually, D as needed, and E unsure. Please take a moment now to answer. While participants are submitting their answers, I'll provide the third CPE word. The third CPE word is sample. If you would like to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the third CPE word is sample.
All right, and it looks like our polling results have noted or have posted. All right, and it looks like the largest percentages are under as needed or unsure, and that looks like that comprises about over 70% of the population. So I just want to provide in this next section just a little bit of context and background as to the interaction between risk management and internal audit, and how that interrelates with strategy, and then ultimately get into some internal audit solutions, because I know we've thrown a lot of risks at everybody today, a lot of statistics over how fraud is occurring. Now we want to hopefully build on those basic controls and those expense reimbursement schemes that Kristen and Walt covered, and really try to provide some mechanisms for your organization to improve on its internal audit or its ongoing monitoring procedures throughout the year. So I just wanted to start off with this graphic that really just shows kind of a change that the Institute of Internal Auditors put out. So this, a lot of people are probably familiar with the old 3 lines of defense model that breaks down your first, second, and third lines. And within this old model, you see risk management here. It almost looks as if it's siloed, it's off by itself, that there's one individual or a department that's responsible for risk management. But really, risk management is an enterprise thing. A lot of people have heard the term enterprise risk management, ERM. We like to think of that as everybody as a risk manager also works for ERM. But essentially just noting the fact that this is really the responsibility of everybody in their own individual job function, not just somebody who's been given the title of chief risk officer or something along those lines. So this new 3 lines model, while it's a very simple change, really highlights that importance. One, as you can see, the first and second lines really get rolled into just overall management, so that you can see risk management is integral to all of these aspects that you see within management. And then one of the really important things I see is within the old model, you see that all of the arrows are going up. There's no arrows going back and forth. Within the new model, that communication flow is going in both directions, from top down, bottom up, from in between the different lines of defense, to make sure that this communication is regular, it's constant, and that's really going to help to provide value to the entire organization. So another thing, just in regards to enterprise risk management, is at the heart of enterprise risk management is strategy. You always want to focus on the highest risk to your overall strategic objectives to the organization. That's going to make for a more efficient risk management program. That's going to make for a more efficient allocation of resources to those high risk areas. Well, at the heart of internal audit is really risk management, because standards from the IIA dictate that formation of the internal audit plan, as well as any internal audit engagement, should start with a risk assessment. That way, again, you are focusing your internal audit procedures on the areas that are highest risk to the process, department, office itself. And then within those risks are focused on supporting the strategic objectives. So just wanted to provide that context to kind of show that relationship between strategy, risk management, and internal audit. So how to protect your organization: to start, implement strategy and controls. Ensure that your internal audit strategy, as well as your cyber strategy, aligns with the overall strategic objectives of your organization. So I'll just go through each one of these areas kind of at a high level, but just knowing the roles and responsibilities for your internal audit department, your risk management professionals, as well as every employee throughout the organization, and make sure that that's formally documented. We've talked about having very clear policies and procedures a lot. Those policies and procedures should also specifically outline the roles and responsibilities of each and every individual within the organization. It doesn't necessarily need to get into names, but at least positions. So again, that way, in times of turnover, that information isn't lost, and everyone knows that this individual, regardless of if it was the last person or the incoming person, is responsible for this particular function or overseeing risk in this particular department or area. Implement some sort of process for monitoring and enforcing the policies and procedures. That can be done through internal audit, performing regular spot checks. Kristen also alluded to having reliable data. Without reliable data, it's difficult to really monitor and enforce your policies. So making sure that on the front end, that your data is useful, that you have the appropriate mechanisms in place to actually be able to properly monitor and enforce your controls. So making sure that you have audit logs to review any kind of cyber activity or access to your critical platforms, making sure your general ledger detail is complete and accurate, having a comprehensive listing of all of your third parties to, again, monitor and manage any risk associated with those outside vendors, particularly those critically high risk vendors, those that have access to sensitive financial information or potentially have direct access into any of your systems. Those would be those vendors that you're really concerned over, because if they suffer a cyber breach or if something happens at their organization, there's the possibility that then impacts your organization, your data, or your financial information. And ultimately, when one of these breaches happen, even if it's the result of a third party, your stakeholders, your constituents, they're going to be upset with you, not your third party, right? Think back to the Target breach that happened, feels like, an eternity ago. But they were hacked because of a third party vendor, somebody that works on their HVAC systems. But everyone who shops at Target who had their information leaked on the web, they weren't upset with the HVAC provider. They were upset with Target for not protecting their data. And reputational things like that can take a long time to build back trust from your constituents to your stakeholders. We've touched on policies and procedures a lot. Having that formally developed anti-fraud program, whistleblower policies, conflicts of interest, and anything else that's relevant to your organization. And then also having the appropriate processes in place through banking controls, internal audit, managing and monitoring your cybersecurity on an ongoing basis, and having the appropriate review and approval process. So this graphic here on the right kind of just at a very high level summarizes your overall risk management process, starting with your strategy and objective setting, identification of risks, assessment of risks, responding to and monitoring, and then ultimately reporting out. So internal audit can really assist in any of these regards. They can assist in identifying risks through their engagement procedures, not so much as assessing. That's really something that's left to the risk professionals or the ERM council at your organization. But risk response and management is where internal audit really provides a lot of value. When the organization identifies a high risk, internal audit has the subject matter experts to go in there, perform procedures over it, and come up with some creative solutions, observations, and recommendations as to how the organization moves forward with mitigating that. They can then also assist in following up on any of those recommendations and reporting on any of those handling plans or risk mitigation efforts throughout the year. So now I wanted to talk a little bit about incorporating technology into the internal audit process. Internal audit has typically kind of been thought of as an expensive or a labor-intensive process, but with all of the changes everybody's gone through in the past 2 to 3 years, just switching over to digital platforms, having payment management systems brought online so that all of your information is available electronically in one centralized location, there are really very detailed, comprehensive internal audit procedures that can be performed at very low cost and with very little labor allocation. So I just wanted to talk a little bit about some of the cost savings and benefits. So again, internal audit doesn't just apply to larger organizations with a formal internal audit department, but it can really be better thought of as any ongoing monitoring procedures performed by the organization to mitigate risk, test controls, and improve operations. So by having internal audits throughout the year, you can better be prepared for your external audit, or as well as any other assessment, which reduces the overall fees associated with those projects. Obviously, being better prepared to turn over documentation and comply with requests is going to result in less labor by any consultant or third party that you bring in. So while it's also great to have formal internal audit procedures performed at your organization, it's also beneficial to periodically bring in an independent third party to provide an additional perspective and potentially look at things your internal audit department might miss, haven't addressed, or maybe just lack the subject matter expertise to adequately perform an assessment. So the use of technology can also help to reduce the associated time and level of effort for the audit procedures themselves. It facilitates the transfer and the organization of documentation, and again, helps to really identify the areas of highest risk of fraud to actually test during your internal audit procedures. And one other thing I wanted to touch on is just the cost savings associated with performing virtual versus on-site testing. Again, now that organizations have so much available electronically, what used to require somebody traveling maybe halfway across the world for some of our international clients to be on site to test, this testing can actually be performed virtually. So the cost savings and $5,000 to $10,000 of having to send somebody to Africa or to Asia with flights, hotels, meals, everything, that cost can now be allocated back into the project to expand the scope, test additional areas, or it can just be used as cost savings to allocate towards other areas, depending on what your budget needs are. So again, just wanted to mention that because if you are considering implementing new internal audit procedures, leveraging the remote versus the on-site testing when applicable and when it makes sense. Again, you don't want to compromise the integrity or the effectiveness of the audit just to perform it remotely, but when it makes sense for the organization, there can be a lot of cost savings associated with that. And the use of technology has just facilitated that. So one thing I wanted to talk about specifically was artificial intelligence softwares. One that GRF uses is called MindBridge. So MindBridge is a tool that we've incorporated into our external audits as well as our internal audits, and it provides a lot of value in identifying fraud trends and transactions for substantive testing. So a human auditor could never analyze 100% of a general ledger detail, but the artificial intelligence program can, and it does so over 40 plus control points. And a control point is, for example, the timing of when an entry was posted, or consideration of Benford's law, which looks at the proportionality of certain numbers in a given data set. The numbers 0 through 9 would appear a proportionate number amount, but fraudsters subconsciously will typically use the same number multiple times. So if you look at a data set and you see that the number 5 appears and an unusual amount, an unusually high amount, that would indicate that, again, something might be off. That would indicate transactions that you may want to test. So it analyzes it over these 40 plus control points, and it is able to quantify a score for each and every individual transaction as to high, medium, and low risk of fraudulent activity. So then you can test accordingly. The software also compiles graphs, charts, other data visualizations that show trends in activity, your income and expenses, fluctuations throughout the year, and helps to identify potential accounts or expense classifications that, again, just carry a higher risk of fraud. And it uses machine learning to improve over time. So essentially, the more you use the platform, the better and more efficient it becomes at identifying high versus medium versus low risk transactions. And it learns essentially the organization's accounting principles, and again, what would constitute a high or medium or low risk transaction. And then Kristen kind of teed this up, but talking about data analytics and trying to incorporate this into your internal audit process to, again, make just more informed sampling decisions to, again, focus on those high risk areas. So data analytics and business intelligence platforms can be extremely helpful in preventing and detecting fraud, and they monitor financial activity throughout the year through direct integrations with your accounting system, or if necessary, through manual uploads periodically. So I just wanted to provide one example of how we've used this in practice. So for an example, we were trying to compile data on our client's IT infrastructure to identify potential vulnerabilities. So we were contacting vendors about their platforms. We kept running into issues that would require us to change our standard forms or update our process at the expense of our clients. So what we did, and when I say we, I actually need to give a shout out to Darren Hewlem in our risk and advisory services practice. He was the one that actually identified this software and figured this solution out for us. So I'm just the one talking about it today. But what Darren was able to do is he identified a technology that our IT department uses to maintain compliance with our document and data retention policies. And using that, he was able to pull together data from hundreds of questionnaires across all of our engagements and compile these. Then using Power BI, he was able to perform or pull together these detailed metrics, graphs, and identify clients that are at a higher risk of cyber breach or fraud due to their IT infrastructure. And it took into consideration things such as lack of phishing training or the presence of on-premise servers without a formal disaster recovery plan, as on-premise servers and not having disaster recovery creates a higher risk, again, just because of the infrastructure itself. So then using this information, we were able to pull together white papers, articles, blog posts to communicate these items to our clients and just to the general public. And the best part about this was, all in all, it cost us $10 for an additional Power BI license because we already have an existing contract with Microsoft for Microsoft 365 and our whole suite of services. So that's all it cost. We didn't have to bring a new vendor on board. We didn't have to pay that vendor continually to manage the platform. And we're actually able to manage that process from end to end. So I say all that just to let everyone know these technologies are probably more available than you even realize. Again, we were able to do this for the cost of an additional $10 and provided a lot of value in identifying, again, any clients that may be at a higher risk of fraud due to their IT environment. So building on that, this is just a basic example from what a potential Tableau or any kind of other business intelligence platform might look like. So as you can see here, this is breaking down the top 5 expense types. And this is all expenses for an employee analysis. It breaks down each and every individual and how many, the number of records, the dollar amount, so that you can focus your testing on these individuals that have the highest number of records or maybe have an unusually high amount of travel expenses. It also kind of provides information as to what areas you want to look into because of the dollar amount, as well as the number of expenses there, and identifies any outliers for you to, again, focus your testing on, and just making sure that, again, you're hitting the areas or the individuals that pose the highest risk of fraudulent activity. So using this information, again, this feeds in automatically through integrations with your accounting system in most instances, particularly if you use a Tableau or a Power BI, that again is a very large, well-known vendor that integrates with a lot of systems. This information is all being transferred in real time and staying up to date without any real interaction from finance and accounting staff. So with that, just doing a quick time check. I see we've got about 8 minutes left, and I did want to leave some time for questions just in case there are any. But again, just because fraud and IT and cybersecurity are so interrelated these days with how much fraud is being carried out through digital means, I just wanted to talk about managing and monitoring cyber risk briefly here. This information was actually discussed during one of our previous risk and advisory services series. So if you want more information on this, I would direct you back to our managing reputation risk as part of your cyber pathway. I believe that was the name of it, but it's on our website if you want more detailed information. But just to focus on some of the highlights in terms of creating your cybersecurity pathway, understand what your baseline is, where your current risks lie, what your digital and information technology assets are, and then ultimately what your highest risks are. So focusing on your crown jewels or your most critical systems that support your accounting, your customer relationship management, vendor management, whatever that might be, understanding what the critical systems are, and then develop a program that, again, centers around that and builds upon your existing practices, making sure that these are properly being communicated and to your employees and that they're being trained on it, and that you implement a process for being able to monitor and continuously improve on your cyber posture throughout the year. And then also focusing on what IT related anti-fraud controls do we have in place? Do we have those banking controls set up on all of our accounts? Are we performing spot checks of user access rights to our accounting systems to make sure no one's getting in there at odd hours or accessing modules that would be outside of their normal job function, or just making sure that they don't have access to initiate transactions when they shouldn't, or have access to certain modules that, again, they shouldn't have access to. So what kind of controls from an IT perspective do you have in place that are going to help to reduce the opportunity for fraud and help prevent and detect? And lastly, this is again just an example of an open source threat intelligence scan that GRF uses. There are lots of services like this available out there. Your insurance provider, as well as your bank, has probably already run something like this on you as part of their vetting procedures and just staying on top of the level of risk associated with having you as a client. Obviously, if you have less of a less sophisticated IT posture from an insurance perspective, there you carry a greater risk, and your premium is ultimately going to be higher, again, depending on the score that you see here. So this is, again, something that's being run on your organization most likely, and could be a really useful tool for not only assessing your own cybersecurity posture, but if you work with maybe smaller third-party vendors who, again, have access to systems or sensitive financial information, who may not have, the resources of a Sage Intacct or a Salesforce CRM, the same cyber resources to protect and secure your data. You might be a little bit more concerned on them. You can actually run this as a third-party risk management practice to, again, just make sure that they're at the same level you are. They're implementing the same level of security that you would expect from one of your critical third-party vendors. And again, just making sure that you're watching the watcher in a sense, and just making sure that, again, they're living up to their responsibilities outlined within that service level agreement. But yeah, with that, I just wanted to summarize some takeaways. So if your organization hasn't formalized and implement an anti-fraud program that documents the controls in place to prevent, detect, respond to fraud, identify and assess those risks to your organization, whether they be cyber, financial, and whether you're concerned with internal threat actors versus external threat actors. Document the controls in place and assess the gaps and weaknesses in the high risk processes, such as expense reimbursements. And again, identify a path forward as to how you improve on that through mitigation, through internal audit, insurance policies, whatever that might be, or whatever's feasible for your organization. Look at the emerging technologies that you have in-house or that might be available to you for a low fee. Consider bringing those in-house or outsource those to a professional to incorporate these into your anti-fraud program. And lastly, perform an assessment to understand your baseline and develop a pathway for improvement using a framework to benchmark against. Framework that you can use that's very well known. Again, it's just COSO 2013. That does include a lot of anti-fraud controls within it. Just outlines kind of the basic control environment for any or for a US based organization. But with that, I think that will wrap things up and bring us into our questions. If anybody has anything in the chat, please feel free to throw that in there at this time.
Great, thanks, Mac. Yes, let's take some time now to answer some questions that we received. So the first question I see is, what does an anti-fraud program cover?
Yeah, and I can take this one, and that's actually a perfect segue to what I just mentioned in regards to the COSO framework. So at a very high level, it documents, again, the existing processes and controls to prevent or detect fraud at your organization. And ironically, because we're here talking about fraud, but to remember this, you can think of the acronym CRIME. So starting with your control environment, C, the existing policies and procedures that document the internal control mechanisms to prevent, detect, respond to fraud. Risk assessment, R, how does the organization identify, assess, and monitor risks on an ongoing basis? Information and communication, I, reporting structure for communicating information to internal or external parties, including whistleblower complaints. Getting into M, your monitoring activities throughout the year, which are the processes in place to manage and monitor the risk and activities related to fraud, including monitoring the whistleblower hotline or process, performing any kind of internal audit activities or spot checks throughout the year. And lastly, E, the existing control activities. What controls are currently in place and are they operating as they are designed to actually prevent, detect fraud? So CRIME, think of that acronym CRIME when you're trying to think about what you need to incorporate into your anti-fraud program.
All right, and we have another question here, and I think this one might be for you, Kristen. Since credit cards have so many fraud risks, should organizations use them at all?
Yeah, that's a good question. It's true. Credit cards are a higher risk than expense reports, and travel advances probably fall somewhere in the middle. But although credit cards, have a higher fraud risks, they do provide some benefits to organizations. So, for example, credit cards could allow organizations to track spending in real time. And if a credit card is lost, the organization could just cancel the credit card. Whereas if a travel advance is lost, that physical cash may not be recoverable. So there are certain advantages to using credit cards. I think the key takeaway is that credit cards do have higher fraud risk. So organizations should make sure that they have proper internal controls surrounding credit card use.
Awesome. Thanks, Kristen. And I did just want to jump in because I saw something coming through the chat. How often should internal controls be formally audited, tested? Well, at a minimum, during your annual external audit of the financial statements, they should be getting tested. Now, in regards to if you have specific fraud concerns, obviously an external audit is only designed to give very limited assurance around fraud. That's not the purpose of an external audit. So that's really going to depend on your organization and your organization's context. And it's really going to kind of fluctuate with the volume of activity. But we would recommend, again, if you do feel that your expense reimbursement schemes or your credit cards have a higher risk of fraud, we would recommend performing some sort of spot check on a monthly basis. Pull 1, 2, again, it's going to depend on your organization's size and the volume of activity. Pull a couple of expense reports and ensure that they're formally documented. All the receipts are there, that they're being submitted in accordance with the timeline. If that's 2 weeks after returning from a trip or within a week or two of month end or whenever the reporting period is, and just making sure that those are obviously being compiled, reviewed, approved, and paid out in accordance with the policies, procedures. But again, that is going to differ heavily depending on the volume of activity and depending on what your high risk processes are. But again, for high risk processes, I would recommend monthly, at a minimum, really quarterly for those high risk areas, again, depending on your capacity and how much time and resources you have to allocate towards performing such internal audit procedures or spot checks throughout the year.
All right, with that, we would like to thank everyone for attending today's discussion. We encourage you to follow us on social media at GRF CPAs and visit our website at grfcpa.com for upcoming events and alerts. And if you enjoyed today's discussion, I encourage you to join us on December 1st as we discuss implementation of the new lease standard. And please remember to complete the survey that will appear automatically following the session if you would like to earn CPE credit for today's discussion. Thanks again, and everyone have a nice day.
Thanks, everyone.